Let's take a look now at the inflation report that came through from Nigeria today. January inflation slowing to 9% year on year. That's from 12% year on year in December. Some analysts are quite astounded by the figure there. Now, this is the lowest inflation has been in over 4 years. Let's delve into the numbers now and also the economic outlook for 2013 through to 2016. We're joined from Abuja by Dr. Yemi Kale, statistician general from the National Bureau of Statistics. Yemi, thanks for joining us today. So, as I was saying, I mean, economists and analysts can't quite understand the number that has come through. I mean, a 3% drop in inflation is quite significant, especially in line with the fact that food and non-food inflation both above 10%. So how do you explain the drop?
Well, to start with, because we had very high base effects in 2012 following the subsidy removal, prices were generally shot up significantly in 2012. Now, because we don't have the same kinds of problems we had in 2012 with policies on a ban of importations and tariffs increases, changes in the price of fuel, we don't have that in 2013. And since the 9% is in year on year, so you're comparing very high prices in 2012 to, should I call it normal prices again in 2013, the growth rate is going to be much lower. So it's likely as a result of base effects in 2012.
Mm-hmm. Now, this is, of course, the lowest that inflation has been for some 4 years. How stable do you think the inflation print is at these levels?
Well, I think for the rest of the year, we are forecasting that inflation would stay in single digits in 2013, largely as a result of base effects. Now, you have to understand that for the most of last year, the CBN had pursued a very aggressive monetary policy, lots of tightening, and I think without many of the issues that we had in 2012, like I mentioned, the subsidy increases, the floods, and so on, you would probably have seen that inflation would ordinarily have come down slightly in 2012. But because of these effects, it was not possible for us to hit single digits in 2012. But in 2013, like I mentioned, because many of these issues have not did not reoccur in 2013, we expect that many of the effect of the tightening by the central bank will slowly start to be revealed in 2013 and should be maintained for the rest of the year. Of course, this depends on what the CBN chooses to do for the rest of the year, mm-hmm. and as well as the impact of fiscal policy as far as the Ministry of Finance is concerned.
Yeah. Before we get into what the CBN is going to do and, of course, the issues around expansionary monetary policy, let's just talk about the imported inflation part of the inflation number, because sitting at 14.1% and a big jump from 9.8% year on year. So what fueled that? And do you see an imported inflation as perhaps under control right now? Because, I mean, still is a very key driver of the inflation going forward.
Yes, again, like I mentioned, the monetary policy stance as far as tightening is concerned, as well as the CBN's decision as far as the currency, the Naira-dollar exchange rate is also, I think it has led to a situation where it is less attractive for consumers to buy imported commodities. So to an extent, such CBN policies have led to a less impact from imported inflation. Yes, the impact is still there, but it's not as pronounced as it should be as a result of the central bank's policy as far as the exchange rate is concerned.
Mm-hmm. Now let's go to the economic forecast that were also released today. 6.75% is what you're looking at for this year. Speed up to 7.2% next year, 6.9% in 2015, and then 6.6% to 2016. So 4 years of forecast there. Talk to us about those numbers and what is going to drive that growth that you are forecasting.
Absolutely. Well, the growth again is going to be driven by the non-oil sector. Largely, most of the significant sectors would be the building and construction, the cement industry. We expect also that the real estate sector should do very well over that period. Also, given the slight improvement in electricity generation, manufacturing companies are gradually beginning to grow, and we expect that this should be sustained over the years. If you notice, the growth rate is largely staying within the same range, and that's largely because following the subsidy, partial removal of subsidy last year, consumers are still gradually beginning to adjust in terms of consumer demand. So again, wholesale and retail trade should maintain its growth. So should agriculture gradually as it begins to come out of the impacts from the recent floods. We believe that this probably will be sustained for the next 3 to 4 years.